Have you ever looked at the market and felt blank? A point where you do not know what to look for in the market, and in the end, you just jump in irrationally and lose dismally. In this YouTube mentorship, we will try to give you order in your trading, and those who will follow along religiously will definitely benefit a lot. So, make sure you do not miss any part uh, by subscribing to this channel and check the notification bell icon so that as we upload all the parts of the mentorship, you will be receiving notifications. So here's the YouTube mentorship outline. We'll start off on chart patterns. Part 2 will be market reversal techniques. Part 3, top trading indicators. Part 4, entry confirmation strategies. Part 5, high-low intraday technique. Part 6, high impact news trading. Then part 7, which is actually one of the most important parts, whereby we'll talk on how to trade using a funded account. So every trader will require to have will actually require a very substantial amount of capital to make a living out of trading. So in this first lecture of our mentorship program, we are going to start off the chart patterns, as I said earlier. So we'll define what chart patterns are, categorize the chart patterns, and the only 5 chart patterns to look for in the markets, and then last but not least, very important discussion. So make sure you stick up to this point so that you will actually be able to fully understand. So what are chart patterns? Chart patterns is a price shape in the charts that suggests what price may do next basing on what they have done in the past, right? So we all know that when we were in kindergarten, we were actually taught a lot of things in shapes. That was not just a mistake, but it was done for us to be able or to easily recall what we would have learned. So the chart patterns you will learn in this lecture are not limited to forex only, but can also be applied to cryptocurrency trading, stock trading, commodities, and futures. So to fully master them, you will need to mark them up as taught here, then make printouts so that you will fully stick them in your mind. So here are the types of chart patterns. These chart patterns are categorized in classes for easier recalling. They are continuation chart patterns, then reversal chart patterns. By continuation chart patterns, we are actually saying their signals are actually telling us that the ongoing trend will keep on pushing. They also suggest that the trend will resume after that particular pattern is complete. Let's say we have a trend that is going in an upward direction. If this pattern is complete in this zone, it's actually signaling that this trend is going to resume. Then there are what we call reversal patterns, in contrary, that suggest complete trend change. For instance, we are actually in an upward trend and the pattern is issued at this point. It's actually a signal to see a complete trend change. Therefore, if you know which patterns to look for in any particular context, you would prepare yourself to actually get involved in the market. They also suggest that trend will change after the pattern completes. So let's start on the continuation patterns, which are the easiest ones, as they are in support of any particular trend. So there are 2 types of continuation patterns that we'll talk about. We'll talk about pennants and flags, but they need us to know the exact market context to look out for them. So there are 2 types of pennants. We have rising and falling pennants. Since our trading method is institutional market maker method, we categorize pennants as continuation patterns, right? Pennants are traded at reset points, right? If you are not versed with resets and either the terminology market maker method. The market maker method is the one that we use, or the one that we teach in our advanced market maker method course. So we are saying after a cycle completes, a cycle completion is a point where we actually look for reversal. So after a reversal, this was an upward trend. We still want to see an upward trend. That is when the pennants are actually looked at. So since they are continuation patterns, we need 3 levels up or down, then let the market wedge to issue a reset. So let's have an illustration of this chart pattern in detail. So this is a cycle completion, 1, 2, and 3. And after these 3 levels, and you actually learn about levels in the lecture 2 of this YouTube mentorship, we'll just give a glimpse of how to count these levels. After these levels, we reach at this point, we expect or anticipate to see a reset, right? From that point, that is where we start to apply the pennants. So a pennant is basically a pattern which is something like an arrow having price structure hitting an up bound and a lower bound. So in this case, the most important part was this particular trend line, which was later broken in this upward direction, and break of this point or this trend line of the upper bound is actually an entry signal. In this case, we had 1, 2, 3, and we expect to see a market reset. 2 lines, the lower trend line in this case is the one that is important. Breaking of that lower trend line signals entry to the downward side. So that's basically a rising and a falling pennant. This is now a real market example. We had 1, 2, and 3. After 3, we know that we'll anticipate to see a reset. So this trend line, which is the upper bound, was the one that was important. Breaking of that trend line that has created our trading chart pattern is our entry signal. So our entry was going to be at this point after we break that pattern. Then another continuation pattern are flags. Flags are the easiest trading patterns provided one can locate the market maker cycle. So it is these patterns that connects 2 different market maker levels. And from level 1 to level 2 or level 3, we need flag patterns as shown below. So we are saying we had 1, 2, and 3. And in between those 3 levels, there is the flag patterns, right? Flags are basically patterns that comes with upper and lower bound as well, but the price action will be consolidating within that small channel. Then break of that channel is actually a signal for entry. In this case, we can see that the market was attempting to consolidate within the channel, and breaking of that channel is our entry signal. Here is what we mean. We can see 1, 2, and 3, and from there we can see price consolidating, trying to connect level 1 and level 2, and level 2 to level 3. We had these channels. So for these channels, try to at least pinpoint 2 points for that lower bound trend line. In this case, we had first point and second point. So breaking of these flags or these lower bound trend lines are the ones that are important, and that is where we make our move. Then the last category, which is reversal chart patterns, we have M's and W's. The first thing one must understand is the position to look for the M and W. It is not every M and W worth putting your money on. M's or double tops are reversal patterns that comes after the market cycle completes. We look for these at the end of third level movements as shown below. In this case, we can see we had 1, 2, and 3. At level 3, what do we expect? A market reversal, and that was where we expected a double top or an M pattern, right? From there, we had 1, 2, 3. After 3 levels, we expect a W pattern like that, and a setup was issued. So these are the points that you should be looking for, these double tops and double bottoms, or simply M's and W's. So we have come to the end of this, and these are the very important notes. To be in a position of applying these chart patterns, you need to understand the fact that market moves in levels, and levels are taught in depth in our advanced course, which you can sign up via the link that I'll leave in the description box below. However, the second lecture of this YouTube mentorship program includes a glimpse of how to count levels. Have more chat time, and I'll emphasize more. Have more chat time to spot these and create a lot of flashcards so that you fully understand and master these patterns. They are powerful, they've been proven over a long period of time, and they do work. See you on the next lecture.